Kevin Hassett, National Economic Council Director. Kevin, it's great to have you here on Overtime.
Great to be here.
I want to start right there, and that is what gave the administration, what gave the president confidence to move forward with what's essentially a ceasefire here on trade and cut those tariffs down to 30% for 90 days?
Right. Well, what gave everybody confidence was an enormous amount of work by the entire trade team and the president over the last few weeks, so that as Secretary Hassett and Jamieson Greer went into the meeting, they had a complete roadmap of what they wanted and what was unacceptable and what had to be done to make a deal. And the Chinese went in with very good preparations as well, some of it behind the scenes beforehand with people, lower level people in both governments. And so in the end, I think that what's happening in China is we're rebooting the relationship. We're trying to make it better for both countries and fairer, especially for American workers.
The clock is ticking. There are 90 days. What needs to happen? What are the next steps that need to happen for to use Treasury Secretary Bessent's words, a long-lasting and durable trade deal to actually materialize here?
Well, the president's been 100% clear that Secretary Hassett and Jamieson Greer are going to continue talking to their Chinese counterparts. If you look at the agreement, we even have the names of the people that we're going to be talking with. And so I think that folks who are able to accomplish this very positive deal are going to continue to talk to make it durable and also to make it better. And so we've got 90 days to do that, and that's lots of time in Trump time, as you know.
Yeah. Well, we are right in that window now when retailers typically build inventory for the holiday season. Sure. I see the potential for a big pull forward where businesses try to get absolutely everything they might need for the season, for the year in from China as soon as possible. Is that what you expect? Is that lumpiness? What's the economic impact?
Well, some of that was visible in the GDP release we saw in the first quarter, right? And so I don't think the inventories actually picked up as much as they should have given the imports that we saw in the first quarter. But now I think that basically what people could expect, what markets could expect, which is why they're celebrating so much, is normalization of things. And so we're going back to where we were with a 10% reciprocal tariff, and that should be fine. I can tell you that we look at what's going on in the shelves every day to make sure that there aren't shortages, and we've gotten briefings that suggested that there wouldn't be, even with the tariffs where they were, shortages at least until the end of the summer. And so now there's basically smooth sailing all the way through. For Christmas, people can put their orders in, and hopefully they'll be ordering more American products.
I'm hearing anecdotally about a lot of damage in demand from Canada, for example, just because, in part, of the breakdown in sentiment and feeling between us and them. Are you hearing the same, and what do you expect to happen from here?
No, I think that again, there were some difficult times. I think that Justin Trudeau and the president didn't exactly get along, and Canada kept making it worse and worse with their rhetoric. But now I think that we've had, the prime minister come in and meet with the president and begin a new, closer relationship. And so I'm sure everything will work out fine with Canada in the end. And don't forget that exempting the USMCA part of trade was a really, really big plus for Canada. And so they've been treated very, very well throughout this renormalization of trade relations.
Kevin, I want to shift gears here because the reconciliation package is making its way through the House right now. It includes that tax bill framework, which we're starting to get some details about here. What's make or break for the president, especially since the clock is ticking on that one as well?
Oh, for sure. And again, we've been running these big 6 meetings almost every week with the majority leader and the speaker and meeting with the president. And he saw Jason Smith just last week to go over this bill, which he's very, very pleased with. The bottom line is that the president's top priorities are to take the previous tax cuts and extend them and make them permanent, but then to go after the things that are going to help middle class folks. Let's have no tax on tips, no tax on Social Security, no tax on overtime. Those are the top priorities for the president right now.
The early estimates have this coming in, this reconciliation package potentially coming in at trillions of dollars, to cost trillions of dollars more than I think what had been intended initially. How do you close that spending chasm, especially when bond vigilantes have been out these past few weeks?
Well, I think the bond vigilantes have probably noticed that we've got markets way up. We've got last month we had $16 billion in tariff revenue, which, multiply that out over a year is going to be a big reduction in the deficit. It doesn't count in the reconciliation package, but President Trump is all in on, in the end, in his budget, getting to a balanced budget, and that requires supply-side tax cuts getting people back to work with things like the no tax on overtime and reducing government spending and getting revenue from tariffs. And with all that in our budget, we're very confident that we can balance the budget.
I'm confused by the president's messaging. Does he want to raise taxes on the top bracket or not?
Oh, no. His rhetoric is very, very clear. There are things that the president said are his red lines. They're the things that he's identified as the must-haves in the bill, including the things we just discussed. And he understands that the House and the Senate are going to be haggling over the things they need to have in order to get the votes. And what he said is he wouldn't advise it, but if they were to have to do that, then he wouldn't object, because he understands that the most important thing for American workers is to get the big, beautiful bill passed. And he's not going to make a whole bunch of straitjackety rules for the House and the Senate.
When is the first big regulation cut that investors should expect?
Oh, the regulation cuts have been coming really through the executive orders all the way back to the 20th of January. And so
is this as big as they get?
Oh, no, they're going to accelerate for sure. And the bottom line is that one of the biggest things that I found back when we were in the first term in 2017 was that the president's basically making it really, really difficult to create new regulations had an outsized, big positive effect on the economy. You could go back and look, and small business sentiment, for example, by the summer of his first term was the highest it had been since World War II. And this is because it's like a secret for economists, it seems, that they hadn't thought of before 2017, that when you have a new regulation, it's really, really hard on business. They got to hire all these engineers and lawyers to figure out what are we going to do with this new regulation. And a huge amount of time under President Obama, especially, who put out a massive, massive amount of new regulations. A huge amount of time was spent trying to figure out what are we going to do with this new regulation. And so by pausing that, already we're having a big, massive positive effect. And that's one reason why I think, as you saw, like core GDP at 3% in the first quarter before all of the dust settled with the uncertainty. And so I think the golden age is clearly coming with the tax cuts and trade policy uncertainty mostly resolved right now.
The president also signed his executive order for the most favored nation policy on drug prices, cutting drug prices. Pharma stocks initially fell and then staged a big rebound today. Is that a signal that the industry doesn't believe much is going to change here?
Don't forget that in the first term, the consumer price index for drugs went down year over year for the first time ever under President Trump, because he was really pushing for more generics and also making tough deals. And so what the executive order does is it basically makes everybody come to the table and work to lower prices for hardworking Americans, and that's what they're going to do. And so just as we got a great deal with China, and we got a great deal with the UK, and we've got 24 deals lined up over the next few weeks, they're going to be great deals with the drug companies too. And I think that in the end, it's going to be good for everybody in America, but drug prices are going to be lower.